Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 7th of February, 2019. We're getting on to 2:20 p.m. Central Standard Time, and as you could see, the grain markets all took a pretty big hit today. Part of the reason is trade talks with China not going well. Now the president is saying that he's not meeting with President Xi at month end. That could be a real problem, or before March 1st. That could be a real problem, but we don't know. So you've got to take that with a grain of salt. The stock market down pretty hard, but recently the market in the last hour of trading has been coming back up. We'll see if that happens, or if the prices do drop and they drop into the last hour of trading significantly, that could be a big shift of what's going on. The other thing that's going on, if you're watching in the world, you're seeing that Europe keeps slowing down. We see that China's economy keeps slowing down, and you got to ask yourself about trade. Last, especially impacting the grains. We're going to get makeup reports from the USDA from when the government was shut down. And word is, of course, that you got to worry about the supply, demand, what the ending stocks look like, blah, blah, blah. That weighs on the market. So to see a down day today, I'm not sure it means what some might think it does. When we look at a weekly area chart of closes, the bigger picture on the weekly, you're still over the 18-week moving average, which means the market still has upside bias. When we go to a daily chart, have you really stepped away from anything? I don't know. We look at this high, we come back to this high and these highs. We knew we were in, and still are in, something of a resistance area. That's the first thing I look at. The second thing is, with today's action, you've now shifted the market where you have a pattern of lower highs, lower lows. So the market without today had a pattern of a lower low and a higher high. Today, at least, it defined that it wants to be in what I define as a downtrend. But remember, your trends get filtered with moving averages. And one of the key moving averages is the 18-day average of closes that came in at 914. You finished off at 913 and a quarter. I feel that we're about right where that market is, and the market's gone back to what I'll call a neutral stance going into tomorrow's USDA important supply-demand report. Let's assume the market takes a bearish swing at everything. So right now you've got lower highs, lower lows, and numbers are numbers. You still closed under the 18-day average, so the bias is down. If the market wanted to let go to the downside, one possibility is the 100-day average at 898 3/4, and under that's the lower Bollinger Band. So this becomes the more important number. Let's assume the market looks at the report, likes what it sees. Well, the battleground's the 18-day average. If you were to get back over these highs of 922.5, you would not turn the trend up. Not. Why? You'd have a lower low, higher high. What about momentum? We have been, and I'll take this back right here, whenever you have readings over the 70 level that aren't going sideways over 80, the market's overbought. And I've been saying you're overbought. You had a rally to the upper Bollinger Band. You fell back to, at this point, challenge the zone of the 18-day average, and today you're doing that again. So momentum down, bias down, trend down. Going into tomorrow's report, the market has a bearish feel to it. When we go to the meal market, it just slugged through the lower Bollinger Band. Now, that's not something that's done in a long time. Did it back here, but it's doing it again. And in this particular market, you have both numbers that make up the slow stochastic under 20, right? They were under 20 yesterday and the day before. So unlike soybeans, this is the weakest sister of the market. It's locked itself into a downtrend. However, under the lower Bollinger Band. You only stay under that number 5% of the time. That does not mean it can't carry itself lower, but understand that there might be a better opportunity after the report to take another look. The strongest part of the bean complex has been soybean oil, and I haven't changed my opinion on that. You've got the bullish embedded reading. You can see the difference of how the chart looks, still the strength in the complex. We then get to the corn, which finished off on the weak side today. It stepped out of its trend, but more important, and I know I've said this every day for a long time, you keep hitting this sideways number, and if you're really focused, you're staying in the channel of the Bollinger Bands, you've just got a lot of sideways action. This is not a trending market. This is a market that's whipping the traders. If you were buying on the highs, hoping for follow-through, you missed out. Selling on the lows, you missed out. A no follow-through market. Now, one of these times, could be tomorrow, you'll make maybe the run towards the lower Bollinger Band. If you look at today's low, you took out the previous low of 376.5. So like soybeans, even if you rally from here, you can't start in terms of the pattern, at least chart pattern, of higher highs, higher lows being an uptrend, and you don't have the pattern of lower highs, lower lows being the downtrend. In the wheat market, a big failure against, no surprise, the upper Bollinger Band and the 100-day average of closes. Now you fall back to the 18-day average and you keep breaking on through. This market is trendless at this point. Sugar market. Sugar needed to get over yesterday's highs to develop anything in the way of holding on to the possibility of an uptrend. That number now shifts to 1293. What do we have here? We have a market that, like the corn, is just caught almost every day, hitting the 18-day average, going nowhere. These are markets that I teach people in my charting course you stand back from. I'd rather come in after the party than get caught into this type of churn in a market. In the coffee, is it not the same story? I mean, if I weren't here and I was just pointing, would you be able to see that? I pray to God you would. You're just hitting upper Bollinger Bands, 18-day average, so far going nowhere. Cocoa tried to break out yesterday, had a complete failure of it today. Now you come back through 2 days ago's lows. The market's not trending. The market is probably going to see the Bollinger Band here shift more sideways, the one on the top drop down a little bit. The market is working its way out of being oversold. It had a big break in the market. It's now, if you think about it, got to rebuild what the chart looks like. In the cotton, my eye focus is right here on the sideways action of this market. Now, we're going to get a USDA report on cotton tomorrow. You think traders aren't evening up? They haven't seen a government report in 8 weeks since the government shutdown. So I think a lot of people are just playing coming out of these markets, and they want to get a look-see at what's going on. In the cattle market, you turn the trend back down today. Now, why do I say that? Well, we had a pattern of a lower low, and I'm going to take this off. You had a lower low and a higher high. Now you've got, with the way that it's gone, lower highs and still the lower low. The battleground's the 18-day average of closes, familiar through this whole thing that I'm talking about. If it can follow through, the lower Bollinger Band of 125.90 offers up what? Support. Let's assume the market decides to rally through, right through yesterday's high. Let me get to that. 127.85 without taking out this low. Well, you would then create a pattern of higher lows and a higher high, but right into the upper Bollinger Band. These are rough trades in these markets right now. In the feeder cattle market, the trend is what? Lower highs, lower lows. You're under the 18-day average. Momentum is turning down. So until you take out this high up here, which is exactly 145.27.5, the trade, I think, is still net sellers on this market trying to see if they can drive it down anywhere. Take that number out and don't take out this low, you can get a pop the exact opposite way. But to get long, you got to buy into the Bollinger Band. Not an ideal setup. In the hog market, it is still a market that's bearish. It is oversold, but it is bearish. It has maintained the pattern of lower highs and lower lows, and it's still plunging that way. It is oversold, but it can reach lower on this. Will the meats be impacted tomorrow by the feed numbers? It certainly could be. Now, I'll be discussing a lot of this and other ideas in my morning subscriber video. And here's the difference between these videos and that one. I can say in those videos, number one, they look different. Number two, I say buy here, sell there, do this. Here's what I think you should be coming out of that market. So it's like we sit together in the morning, set up a game plan, and you can either follow it, don't follow it, say, gee, he's bullish, he's bearish, whatever it is. That's the general idea of it. The charts are jet black. I explain what the different lines are, and they're the very, very popular trade signals. I cover all the sectors of the futures market. So it is for futures traders. It's not meant to be an ETF ETF research report. It's not meant to be a stock one. This is about the futures markets. And it goes very fast, but in the same way each day, so you can jump anywhere you want in the recording, and it'll take you right to the area you want to be. The beauty is, I'll discuss the chart action like today with the stock market. You know, in the last hour of trading, we've been getting late day buying. Are you going to get it today where the market reverses some of this loss? Don't know, but I bring these things up. How do you get access to it and what do you do? It's really simple. It's a small charge, $7.95 for the first 30 days. How do you get it? It's simple. You can either call my staff, they'll work with you. You can go to our website. If you go to the website, go under Research or Education, Ira's Morning Subscriber Video. I'm Ira Epstein. Hope to see you there. You have a good day.